Hey, this is Justin with DayTradeTheMarkets.com on Monday, March 25th. We had some pretty nice movement in several markets, so what I thought I would do is strip our charts down to what we call our first building block, which is our level 2 and level 3 relative aggression bars, and really look at about 5 or 6 different markets and show how these relative aggression bars are kind of the first step that you want to use to really make sense of, is there strong buying, is there strong selling, when is that coming to an end, and so forth. And by that I mean what we look at typically is a lot of different pieces of evidence, a few that form in real time. We have a filter and support resistance zones, high velocity moves, decelerations, that sort of thing. Those all come in real time. We also like to put in some bigger picture context. What I want to do here again though is strip the chart of everything but these relative aggression bars, because that's really the first major building block. It's going to help you increase your edge in that. Number one, it's going to help you know when to not fight the market. So in other words, if there's a lot of bearish evidence in the market, for example, you know you don't want to be long. You don't want to fight that until you see some actual bullish evidence, and vice versa. Okay, so that's kind of our first goal is to stay out of the wrong side of the market. Okay, once we know what's the wrong side of the market, then we can focus in on how do we get into a low risk opportunity on the right side of the market. And once we figure that out, we can look at, okay, how do we stay in the winning trade as long as possible. And in other words, if we're in a short trade, how do we stay in that as long as possible until we actually see some bullish evidence coming in. So again, it's just kind of building one step upon the next to help increase your edge, increase your probability of success. Okay, so again, with the relative aggression bars, that's kind of our first building block. To go into a little bit more detail here on relative aggression bars, what we're basically trying to look for is when one side, by one side I mean buyers or sellers, is more aggressive than the other. Because it's only when the market, when one side is more aggressive than the other, that the market actually moves. So we're trying to look at the under the surface order flow data to determine, number one, which side is more dominant at a given time, and then number two, and so we can see it visually at the blink of an eye. We don't just have to look at raw data. To what degree is that side, buyers or sellers, more dominant at a given time? So we have level 1, which is moderate buying or selling aggression, level 2, which is strong buying or selling aggression, and then level 3, which is extreme. And these level 3s and level 2s, you can see, are pretty rare. So we really want to focus in on these level 2s and level 3s. Okay, and so what happens is, especially with these level 3s, this is what we really want to hone in on, these extreme buying or selling aggression bars, because we know when one of these forms, for example, if there is a selling level 3 bar, we know that if there's quick follow-through, this market's likely to sell off in a pretty hard way. However, if there is not follow-through and it gets rejected pretty quickly, it's probably capitulation. We're out of gas. The market's going to head in the opposite direction. Okay, so we really want to monitor, is there follow-through, is there rejection, especially on these level 3 bars. And these level 2s can give us a heads up as well, but especially on these level 3 bars. And again, the idea here is, if there is a level 3 bar with follow-through, number one, don't fight that. Number two, how do you find a way to go with that? Okay, that's where some of the other evidence comes into play, but that's what I want to just talk about right now in terms of our first step, kind of a real-time roadmap to the short-term direction of the market. So what I've done here is, again, stripped off the majority of the evidence from the chart, taken all of this evidence off, and we're just going to look at the relative aggression bars and just the level 2 and just the level 3 bars. Okay, so hopefully that makes sense for now. And what I'm going to do as well is look at about 5 or 6 different markets. I'm going to look at them all on a 3-minute chart, just so we're looking at apples to apples. But you could look at this on literally any time frame. You could look at this on a 3-second chart. I don't know why you would, but you could. You could look at this on a 3-minute chart, a 30-minute chart, anywhere in between, anywhere beyond that. Okay, so the same logic applies no matter the time frame. Okay, so what we can see here is, again, when the market, we gapped open with some news out of Europe, and we want to look for our first major structure, especially level 3 bars, but level 2 bars can help as well. So you can see we have a selling level 2 bar toward the low of the day at the time. We ask ourselves, can the high hold, or do we have follow through below? Can we get like a full bar below? And we do get a full bar below, and it's a level 3 selling bar with immediate follow through. So this is telling us, at least short term, bears are very much in control of this market. And as soon as one of these forms, until that high can be taken out, or something else on the right side of the chart comes into play that changes that, you know that you don't want to be fighting the bearish side of the market. Okay, so now we have another wave of a level 2 and especially this level 3 selling bar. A little bit of a reaction with the level 2 buying bar, but again, do we have a full bar above this level 3? Do we have a full bar above this level 2 buy? No. Okay, sellers are still in control. Here's another level 3. Okay, do we have a full bar above that bar? No. By full bar, I mean, do we have space above that? No. That's just kind of a rule of thumb. But again, you can see we've had a pretty solid wave of selling, and we're still not able to generate any buying bars that have any follow through. So again, level 2 bar, the high holds. Level 2 bar, the high holds. Level 3 bar, the high holds, next bar. Level 2 bar, does the high hold? Well, it bounces a point or so, and then it takes it out. And you can see this is our first time that we've had a selling structure where we've had a full bar above. Does that mean, bulls have taken over? No, that's not what that means. It simply means this pure wave of selling has come to an end, so that number one, if you were short, that's a pretty good indication to get out of your position. Number two, if you were certainly, if you were looking to get long, you know that at least things might be changing to some degree, but it's telling you this pure wave of selling is over. Now we're into more of a two-sided market. Now we want to see, can bulls come into play? Can bulls actually make a move, or are we going to be more in consolidation? You can see this is our first serious attempt by bulls, this level 3 buying aggression bar. Okay, we get a little bit of follow through right away, and then we get level 2 bar. We start to sell back again. So again, you can see we're basically two-sided, and we consolidate essentially within the confines of this level 3 bar the rest of the day. But we had that major move forward, or excuse me, major move down early on in the session, and that's giving you a clue, because obviously going into the day you're probably pretty bullish. We're gapping up, the market's long-term coming near long-term highs. You're probably looking for a way to get long. This is helping you stay out of that situation, because you can see that short-term bears have really come in strong. Okay, so let's look at another market. Let's look at the here's the Russell. Okay, now this is a little more strength early on. Again, 3-minute chart. You could look at this on anything. Level 2, our first structure, instead of being a selling bar, was a level 2 buying bar, and you could see we rallied a decent amount. But then as we come back down, we get a level 3 selling bar, which is stronger than a level 2. Immediate follow through, follow with another level 2. Again, that's telling us sellers are in control of this market. Buyers were in control here, sellers just took over. Level 2 bar, level 2 bar, level 3 bar. It's not until this bar here, a level 3 buying bar, that starts to get some follow through, that this market goes from a pure wave of selling to more two-sided. Okay, now this low is taken out, and this we have some selling bar. The high of this holds. We sell off a little bit more, then we attract some buying. Now we're again more of two-sided, because now we see some selling. Okay, but again, the same idea, and this is a 3-minute chart. You could look at any time frame, but again, the idea here is, can you determine as a first step which side's more in control? Okay, bulls are more in control, bears are more in control, two-sided, bulls are more in control, bears are more in control. Okay, so it's just shorter term, can you determine which side you don't want to be on, first of all? And then number 2, which I'm not going to even get to at this point, is how do we determine where to get in once we've determined what side we do want to get on? Okay, that's step 2. The first step is avoiding bad trades. Okay, so let's look at another trade. Let's look at the YM. Obviously, it's going to be very similar. You can see here some bullish evidence right away. Make new lows on some level 3 bars. Rejection of a level 3 buying bar. Okay, rejection of level 3 buying bars. It's a little, it's a little more volatile, I guess you would say at this point. But you can see that every time we have selling structure, we get follow through. Every time we have buying structure, it gets rejected. Buying structure, rejected. Okay, selling structure, follow through. Selling structure, follow through. It's not until this bar here that we have buying structure that has follow through. So again, it doesn't mean bulls have taken over, but it means this pure wave of selling is over. Now we're more two-sided. Okay, let's have a look at, here is a Euro chart. It's got, obviously it goes, this is a longer trading day here in the Euro, so I've got it, it's a little bit more squished, but still a 3-minute chart. First structure, selling structure. Okay, immediate follow through. We actually come back and test right to there. More selling, more selling, more selling. Here's our first level 3 bar, immediate follow through. Level 3 bar, level 3 bar. All these highs are holding of these level 3 bars. Okay, they haven't been taken out. Okay. Another level 3 bar, level 3 bar, level 3 bar, level 3, level 3. Here's our first level 3 that doesn't have its high maintained. Okay, so it's telling us this pure wave of selling, which basically started here, is over. Now we're more two-sided. Now its low gets taken out and we get rejected on this one. After we bounce a bit, we start to see more two-sided action. Okay, I know I went through that quickly, but again, it's pretty easy to tell just with a quick view. Selling structures are having follow-through, buying structures are getting rejected. Okay, selling structures with follow-through, and it wasn't until this one selling structure had a little bit of rejection. Okay, let's look at what else is there. Here's crude oil. Okay, early in the day, level 3 buying bar, buyers are in control. Level 3 buying bar. It's not until this bar here that we start to see some evidence of selling. Okay, then you see the level 3 selling bar with follow through. Okay, so we had a buying wave. Now we're two-sided. Now sellers have started to take over. Okay, sellers have started to take over. This one has its high taken out over here. Now we're more two-sided. Okay, so again, I know I'm going through this quickly, but it's the idea of how do you stay out of, number one, how do you kind of stay on the right side of the, I shouldn't say stay on the right side of the market, but how do you avoid being on the wrong side of the market as step one. Okay, let's see, what else is there. Here's gold. This is a little bit different in that we didn't have our first structure, we didn't really have follow through. Here's our level 3 selling bar, and again we ask ourselves, can the high hold if it's a selling bar, or is it a rejection? You can see the low, we didn't even test the low. We've got a lot of what we call excess on this bar even, which is the space on each side of that bar. Okay, it's basically telling us that's very quick rejection. So this level 3 bar had no follow through, it was rejected. Here's a level 3 buying, or a level 2 bar and a level 3 buying bar that took its high out. That's again a pretty good indication. A low's in place, buying has come in. Okay, so attempted selling, rejection, now we have a buying wave. Okay, start to get a more of a two-sided activity. Some more buying. Couldn't really get follow through here, so we're two-sided. No follow through there, so again we're two-sided. But again, the idea here is how do you avoid being on the wrong side of the market? And the first and foremost way we do that is to simply look at what are the level 3 bars telling us. Okay, like going back to our ES market, the kind of the market that I look at the most. Level 3 bars with follow through, level 3 bars with follow through. It's not until this level 2 bar gets rejected that we start to get some buying activity. Okay, so again, this is a 3-minute chart, so this is the whole day. This is basically from 9:30 Eastern to 1:30 Eastern, most all morning, 4 hours or so. So hopefully that makes sense. Again, I didn't want to get into anything more than just step one, which is looking at the aggression bars and how do we avoid being on the wrong side. Didn't want to get into, at this point, this is already a 13-minute video, didn't want to get into all the different support resistance zones and filter and deceleration and all the other evidence. But this is just kind of the first thing that we like to look at. So I thought it was an interesting day, helping you avoid being on the wrong side. So hopefully that makes sense. Let us know any questions that you might have. We'll talk soon. Thanks.